Market on close. Oklo set to release its quarterly report card after the bell today. Estimates are for a loss of 13 cents per share, which would be an improvement over the prior quarter. The company, which is seeking to build small nuclear reactors to power AI data centers, has seen its stock pull back sharply over the past month after a year of some really impressive gains. And with all that said, of course, it's time for Options Corner, where we will be highlighting Oklo today in advance of its earnings. Rick Ducat, our lead market technician, joining us today to walk us through some of the most important numbers. Now, when we talk about Oklo and we take a look at them, I just mentioned that we have seen this pullback, obviously very evident on their chart. And we are seeing them pull heavily to the downside too, just today in advance of their earnings, down 6% today alone.
A significant pullback, but if you don't squint, you might miss the S&P and the utilities sector ETF all the way down here. So we're up 335.5% during the past year versus about 13% for utilities. Certainly not what you would think of if you asked me to picture a typical utility type stock. Usually much more like a consumer staple almost, something that's more stable, pays good dividends, more of a defensive play. But this is other stocks in that nuclear space here. SMR, NuScale Power, NNE, Nano Nuclear Energy, LEU Centrus Energy, LTBR Lightbridge. Not exactly household names, but even the weakest ones are outperforming XLU here. So some great interest in this sector as the ever increasing demands for power from AI intensify here in this space.
Yeah, certainly. Our last guest even mentioning nuclear as a place to keep an eye on, where we have seen considerable moves to the upside, but also some valuation questions here. So as we take a look just specifically at Oklo, not against its competitors, although I did love that you said don't squint or you might miss the actual market action performance against the chart. What are the technicals showing us as they come into this important report card?
Well, as you said, a pullback here, and I had to laugh a little bit. This company was described as being pre-revenue, which is just kind of a funny way to phrase it. But really, though, that's kind of how things go when you start out here, so I'm not making fun here. But a head and shoulders type pattern is what stood out to me potentially here. Typically a more bearish pattern. We are below that supportive neckline area near 110. But, earnings could really change everything. That's a huge potential catalyst. So I don't think I would put too much emphasis on a pattern like this when we have a large event risk type of situation right on the horizon here. Still, it's a really good example of what you would look for if you were trying to make a play off of this type of pattern here. You can also see here, this was our old high point. This was our breakout point. So 84 stands out as a potential supportive level if this move were to start to dematerialize and start to move back toward the lower edge here. When we do look at our moving averages, our orange 63-day EMA is pretty close to this 110 neckline level. That could be another resistance confluence to break through in the shorter term, but the level of our shoulders near about 143 stands out potentially as further resistance to the upside. Momentum trailing off, moving downward here. Once again, though, as we head into earnings, that is certainly not uncommon, not something that we would really make too terribly much out of in this case. Finally, if we were to look at our volume profile study, volume nodes here near about 140 as well as just below near about 113, 114 or so. Those areas stand out as potential congestion points to the upside. Meanwhile, things don't really pick up again to the downside until about 75, which is where we also have our -1 standard deviation channel. So if things really do start to fall apart, that would be another line in the sand.
Yeah, and you highlighted that 140, 143 level for where the shoulders are. We're trading roughly 25% off of that right now at about 104. So, pretty far removed from that shoulder level. But as we look at options activity, how has the volume been ahead of their earnings?
Slightly heavier than a typical day. Sizzle comes in at about 1.3 versus the 5-day moving average here. About 105,000 options changing hands, though, today. So pretty elevated relative to the other part of the market. Rather unusually, 43% calls. Typically, you see calls outpacing puts here. So something a little bit unusual I noticed about this one here. In terms of the high open interest for our November expiration, 95 on the call side, 75 125 on the put side were very large outlier numbers here, so those were some interesting points to consider. One big trade, minus 600, January 16th, 125 puts done as a spread with plus 1,200 of the 95 puts in the same expiration here. Seems like it was probably a closing trade, though. Otherwise, they'd be selling in the money puts. Net credit came in at about $310,000.
A big trade, though. Well, Rick, we appreciate you being with us to break down Oklo and also the options activity we're seeing ahead of their earnings report, which is expected out here in about a half hour.